It's the beginning of October. And what do I do at the beginning of each month? That's right, I give you a market update for the previous month. So today I'm talking about September. Stick around. Hi, welcome back. My name's Joe Brown. I'm a realtor with Century 21, List with Beggins, located in South Tampa. Thank you so much for being here with me today. So I'll tell you, if you enjoy these videos and enjoy this video, please share it with your friends and family who may be considering either buying or selling their home, because there are some things happening in the market which are important to track, right? So just as the caveat, I'm talking about the 5 zip codes of South Tampa for the month of September. Well, what happened in September? We faced a major hurricane, Hurricane Ian. Now, the Tampa Bay area was absolutely spared. We had down power lines and people without power for days. But my heart really goes out, and I keep the people in prayer down in Fort Myers and Naples in South Florida and what they're facing. And in future videos, I want to talk about the impact Ian is going to have on us, both economically and insurance-wise, because it will absolutely affect homeowners insurance. So let me put the chart I do every month, right? So let's put that here just so you can follow along. Take a look at active listings. We're at 551 active listings for September. But take a look at the next group, which is new listings. These are people that decided to put their home on the market. You can see we went from 290, right? 290 to 180. So we lost about 110 homes coming on the market. Now, if you've been with me in the past, you know the average, I say typically the average is 250 homes a month that are being added to the market. So now, even with the 1 week that we lost to Ian, I don't think that would make up the 110 homes. Maybe it would make up 20. I don't know. But the question is, why would people hold off on listing their homes, right? Well, I think the number one issue is, I would sell my home, but where would I go, right? If I live in a house right now and I'm paying 4%, 4.5% interest rate, well, if I go get another house, I'll pay 6.5% to 7% for that house. Why would I do that? So I think the rise in interest rates are certainly they're affecting buyers. We'll talk about that in a second. But I think they're also impacting sellers and why they're holding off listing their home. And I want to talk about that when I get to the end, right? Now, in education, when we did teacher evaluation, I always kept notes, and I had a line that I called the so what line. What I mean by that is I would put what the teacher's doing, but then the so what. Here's what the teacher's doing. So what is the impact on students, right? So I'm sharing with you, here are the numbers. So what is the impact for you? So when I get to the so what stage, right, stick around for that. Look here, days on market. It's creeping up, isn't it? If you remember a few months ago, we were at 4 days, 5 days, and now we're at almost a month on the market. Now, it is still a fast market, right? We say typical, an average back before COVID, houses would stay on the market for 4 months. 4 months. So now we're still at a month. It still goes quickly. Every now and then you'll still have multiple offer situations. So this is something Now, this is a good number for buyers because what buyers faced a few months ago is if they saw a house, they had to make a decision then as to whether they wanted to make an offer on it. At least now they have some time. They can look at the house, they can think about it, they can look at other houses, right? So from a buyer perspective, this is good. The look at sales. Sales went down slightly from 163 to 144. And again, that difference could absolutely be made up in the 1 week we lost to the hurricane. So it's holding steady about 144, 150. Now, let's just take a look at I didn't even put it up here, months of inventory, right? So you get months of inventory by taking how many homes are on the market, how many are selling. And you can see from 550 and we're selling about 150, we're over 3, almost 4 months of inventory on the market. Now that's good because we want more inventory because then prices stabilize, right? It is still a seller's market. Remember, anything under 6 months is a seller's market. It's the speed of the market you're talking about. So if you only have 1 month of inventory on the market, things are moving quickly and prices accelerate. Once you get to 4, 5, 6, 7 months of inventory, prices start to stabilize. Prices are still increasing, but stabilizing. And over 6 months, you may see a decrease in prices just because there are more homes on the market than there are buyers. Now, whether we're approaching that, only time will tell. But we are seeing an increase in inventory. We're seeing a slowdown in sales. So this is something to watch. And I need to talk about that so what number. When we talk about median sales price, you can see we're still right around 600,000, at 580. Now, let me just talk about 33606 because their days on the market increased to 108 days. So the homes that sold in September were on the market for 108 days, but the average sales price was $1.3 million. That's 33606. And there is that teeter-totter where the higher the price, the longer it's going to take. It's that teeter-totter, right? But the higher the price, the longer it's going to take. So that's happening in 33606. The ratio, which is what houses are selling for as opposed to what they're listing for, right? That comparison, we're at this month 97.8. So let's say 98%. Again, if we go back to March, just 5 months past, we were at 102, 103% of asking price. So owners are adjusting the prices down. And it's not that the house is worth less, it's that the buyers can only afford so much because of the rise in interest rates. We talked about months of inventory on the market, 3-4 months of inventory. So let's talk about the affordability. I just read this morning that interest rates dropped to 6.6%. And again, look at that 10-year treasury. I've said this past few videos. In fact, I'll put a link here to one. I really talk about that. The 10-year treasury is going up, which is causing interest rates to go up. And that affects how much home a couple can buy, right? But look at it from a seller perspective. So a seller has a home. Home prices, the home values have gone up 35, 40% over the past 2 years. So the equity in their home has increased 30 or 40%. So when they go to sell, they're not losing that 30 or 40% equity, right? They may have to drop the equity back to 25%, right, in order to get the home to sell. This is really a time of affordability adjustments. Homes have to be priced to where two things have to happen. Buyers have to be able to afford the house, and two, sellers have to agree to accept that price. Why would a seller sell a home now? Well, I told you my opinion why some sellers are reluctant to list their house, because where would I go? But we do know that there are sellers that have to move for family reasons. Maybe their job's being transferred. Maybe, and I know this is happening, there are families that are scared because of Hurricane Ian. They said, we're going to get out of Florida while we can, and they're going to sell their house and move out of state. And listen, I'm not, you have to do what you think is right for the family. But I think that's what we're going to see is people that either have to move or choose to move for whatever reason are going to list their house. They have to list their house at a point that people can afford. And what people can afford is tied to the interest rate. And as interest rates go up, what they can afford goes down. So the slight downtick in interest rate affects affordability. It was a minor drop, so it doesn't affect affordability too much, but it's still there. Yeah, so we are still in a seller's market, right? So as look at months of inventory. If months of inventory is here, and then it settles out, right? As we go further out, the increase in value flattens before going down. You'll see newspaper articles, right? And I did this on a video. I'll put a link to it here a couple videos ago where I showed headlines. Home prices are falling. There's going to be a market crash. Well, there's a market crash if there are more houses than there are buyers. Are we there yet? I don't think so, because we're at 4 months of inventory on the market. It's still a seller's market. There are still buyers. I will tell you, I receive offers for leads multiple times every day. There are still people looking to buy homes. So there's still that demand. It's not as high as it was a few months ago, and what they can afford isn't what it was a few months ago. And so what some buyers are having to do is, I really want to live in Tampa, but I can't afford Tampa anymore. So maybe I have to look outside. I'll look at Palm Meadow. I'll look at Plant City. I'll look someplace else, right? So these are just some trends I'm going to keep track of, and I will share them with you. I thank you for joining me today. Check out my website, joebrownc21.com. On that website, you can search for homes. You can read my blogs. You can see testimonials about people who've worked with me. I want to be your trusted advisor. So please call me. Let's chat. Let's see if buying a home or selling a home is in your best interest. And let me tell you, if it's not, I will tell you. I will be honest with you and say, this isn't the best time. So let's talk. Give me a call. As I said, share this with your friends and family who you think need to hear this. I love sharing this information with you because South Tampa, Florida living is awesome.